Hello traders, and welcome to our lesson on the application of trend lines. So, what are trend lines and how can we use them is the question that I always get from my students. Okay, trend lines are, let's just define it straight away. Trend lines are dynamic support and dynamic resistance. Okay, trend lines can occur on a downtrend to identify the downtrend. For example, here we can see we've got the highs, we've got the lows, we've got the lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So we've got a nice downtrend, and we can clearly draw a trend line from this high connecting to this significant lower high and this significant lower high if possible, and we run it through into the future. We project the trend line to the future so that it can act as an area of support and resistance for us in the future. I'm getting straight into it, guys. So we can clearly see that the tighter that the trend line it gets, the more accurate it is. So for example, here we have the lows, we've got the lower highs being respected by the trend line, push lower, another lower high being respected by the trend line, being pushed lower, and then we had price action bottoming at support, push through again to the trend line where we've had a minor rejection, and then we had a break above the trend line, a retest and continuation. So clearly here we can see the trend line acted as a good level of dynamic resistance. Dynamic resistance means sideways resistance and sideways support. Because we've seen the sideways resistance, price action had managed to stay in this region of this direction to the downside since 2015 June, probably higher, since the 2014 30th of June, all the way down to the 2015 March, push back up. When we hit, this is on a weekly time frame, down and again. So the definition of trend line is the connection of two or more lows or two or more highs. So lows, for example, I mean this low to this low, we could have had a dynamic support. So connection of two lows, and then can we project it into the future? So you could have used it as that way, where we've seen a wedge formation occur, where price action with respect to this area of support. But what you could also do is do it this way, okay? And you could create yourself a channel. So price action, area of support, again, we've broken through it, came back, held the support, used it one more time as support until we pushed it up. So you can have some sort of channels as well. Trend lines can be dynamic resistance, but it can also be dynamic support. Okay, another example here. We've got a nice trend line occurring here. 1, 2 points, and we run it straight through, keeping it as close as tight as possible to trend line. At the top, 2 highs. So we've got the first high, second high, and we run it straight through. So as long as I can spot 1 high, 2 high, 3 high, 4 high, 5 high. So I'm gonna do this. See, I've got 1 touch, 2 touch, price action nearly came back. There you go, the tighter. So we've got this high, a fake out, pull back, retest, can break to the downside. So you can clearly see that price action was acting as an area of support, but also respecting an area of resistance. This is dynamic. If you was looking at it in a correct way, then you would have seen on a weekly time frame that this area is acting as an area of resistance. You look left, we've got an area of support. So support, resistance, multiple fake outs, market formations, and then we had a push to the downside. So therefore, that can be used as a dynamic support and a dynamic resistance. Okay, so moving away. If you look at this way as well, you could draw it this way from this high, try to connect it to this, and then see where price action can move. So you can do it this way. You can bring it like this, and you could see that we've got our sign. So the reason why we're doing it this way, at this point, what we're doing is we're looking for significant highs, okay, where price action had made a turn, and now we're getting a new trend. So this was a significant high. Again, this was the other significant high, and then we had a push back to the upside and push down. So once we spot a big trend, once we spot our trend lines on a higher time frame, we can go down to a smaller time frame and then apply the other trend lines. So we have an outer trend line, we have an inner trend line, and then we have an inner trend line. Okay, I'll explain all three of them, what they are and what they do and how we can use them. Okay, so when you are trading and you are looking for trend lines, you want to start by connecting the significant swing low points with the next swing higher low points. So for example here, if we're looking for an uptrend, if we're looking for an uptrend, like I said, you want to find a swing low point, then you want to find your next higher low, which is here, next higher low, which is here, and the next higher low, which is here. Clearly I'm in an uptrend. I'll draw my trend line and follow it through, project it to the future. Okay, on a downtrend, what we're looking for, on a downtrend, you want to connect the significant swing high points to the next significant swing lower high point. So we've got the highs, pull back, lower high, and then continuation. So we want to find a significant high, significant lower high, and you want to draw it, and you can see how effective this is. Dynamic resistance, push down. Okay, so moving on. Trend line, where should it be started? That's the question I get as well a lot. The higher the time frame, the more confluency you can build on your trend line. The higher time frame again, the more significant your trend line is, and the stronger your trend line is, then the higher the probability of your trend line being respected it is. Okay? Another thing, it will help you build your bias. Higher time frames always help us build our bias, which is why we start our analysis when we're doing our top-down analysis, we start on a monthly. Okay? With the trend lines, you don't have to start on a monthly, because if you look on a monthly and you look on a weekly, they tend to be nearly the same. So we've got this downtrend on a monthly. If you go down to the weekly, they tend to be the same. Still got the downtrend, but just a bit more clearer, which is important for us. On a weekly time frame, one trend line should be applied on a weekly time frame to help us with identifying the trend. However, what we can do at times is have two trend lines. So for example, if we was connecting from these swing high points, we can also have swing low points giving us a channel to the downside, like I showed you here. Clearly, we've got significant low points connected to this significant low points. I could do it like this, but then I could also do it like this. Okay, clearly I've got a channel, price action's bottoms, highs, price action here. If I swing it, I could either do it like this. Yep, here. Do it here. This point, push up, retest, push back up. And then this is what I say. This is what I mean by having an inner trend line. Because you could have an inner trend line like this from these points, connecting it to this area. If this price action was never to occur and we had a move like this, and we was looking at price action here, we would have been drawing an inner trend line from here to the upside, waiting for a break to the downside. Once that's occurred, I'd be switching my Fibonacci tool and be using it like this here. I'm sorry, what am I doing? Not my Fibonacci tool, what am I talking about? I would have guided price action from this low point and used it as here as an area of maybe support. So we can see a dynamic support, and every time price actions get into these lows, I'm going to look left and look for significant points. Clear significant points here. We can potentially price action, which it can come down to. Also, if I look here left. Okay, so you can have your trend lines. My goodness. So you can have your trend lines upwards, downwards, and potentially sideways, even if it's coming down from these angles. So a trend line should always be started on a higher time frame to give you your bias. So we've got our bias. Okay, higher time frame, we've got our bias, our low lows, lower highs. Let's get rid of this. Get someone to exit. Got our low lows, lower highs. Okay, and now we're projecting it to the future, because that's what we want to always do, just in case price action comes back to it in the future. You want to now go down to the daily. Clearly, on a daily, we can see that we've broken out of this downtrend, and now we're back in it. So we're respecting it, and we can use our weekly trend line as an area of support, dynamic support, just in case price action comes back here at some point. We can use it to project to the upside. But now what we can do here is we can use our inner trend lines. So what is our inner trend lines? So we got our higher time frame trend line, which is our bias to the downside. Now we want to look for the same format, but just on a smaller time frame. So we can see our significant high point, price push down, lower highs, push continuation, significant lower highs, equaling still. We haven't broken structure. Look left. Structure still here. Okay, and we've continued to the downside. Two things. Either can have a trend line drawn from here, lower lows, lower highs, lower lows, lower highs, to the downside. 1, 2, to the downside. And then you can wait for a break to the upside. And then what you could do here is you could have it here as well, where you got your lower lows, lower highs, another lower low, lower high. So you can draw your trend line from here to here. And this will even give you a better channel. Look, here. And you could do it from here. Nice channel. Look, it's nice little tight channel. If I get a break, retest, I know that I've got a dynamic trend line here. It's just narrowing price action and keeping it as accurate as possible for yourself. Okay, what you could do, which is easy, is you could do this as well. Bounce, use this dynamic support, and you literally do this. Wait for, if you see price action ever, trade into the upside, use it as a dynamic support, wait for a breakout. Retest of dynamic resistance, continuation. Back up, continuation to the downside. These are called parallel trend lines, okay? When price action is like this, you see how this line is parallel to that line. We can use it as a parallel dynamic resistance and dynamic support. Going down to the 4 hour, you can see as you go down to a smaller time frame, your chart should not be filled with trend lines. It should just be filled with significant trend lines. So we know we've got a weekly trend line, our daily trend line, which is showing us the trend to the downside. And then finally what we could do is have an inner trend line from here, from this area, pushing it down to this area. Look how neat that looks. So we've got our significant point here. If we draw a trend line to the downside, we can use this area of dynamic resistance, another area of dynamic resistance, and now we can use it for targets. If we break above this support region, we can come back up into this resistance here, which lines up with the dynamic resistance. Okay, and that's also your trend line. Okay, so trend line bounces on when you're applying it with other confluencies. So this is what other confluencies are. Having the trend line as an area of dynamic resistance, but then also being able to spot your support on a monthly key level, that's adding confluencies to your trend line. So if, for example, this will be a clear trade here, rejection of the trend line, price has closed below the monthly resistance. What's happened? We've had a double top on a monthly resistance on a smaller time frame. Let me replay this whole zone here. So we can clearly see the market structure. We've got a head, shoulder, shoulder. However, we haven't broken the resistance of the trend line. Rejected the trend line, price pushed down to the downside, pushed back up, downside, pushed back up. Go down to the 1 hour time frame, we can clearly see that price action now is respecting the top of this support and resistance and the bottom of support. However, what has it created? It's created the lows, lower highs, and potentially another lower high. So you've got a series of lower highs on a smaller time frame. If you play it, you can clearly see that price action is going to try to attempt, and we haven't been able to break the resistance again. You can see that we've just tried to break above support and resistance, wasn't able to, and then that's how you got the dump to the downside, get a retest, and then continuation to the downside. This is what you guys should always be doing, adding confluencies with your trend line bounces. Okay? So, what you could do here as well, on a smaller time frame, is draw your channels and pennants and also wedges, etc., which is all these reversal patterns. That's what you could do. See, for example, here, you could clearly draw on a 1 hour time frame an area of resistance such as like this. You clearly can see the highs, lower highs, lower highs, lower highs, but you can also see at the bottom here we're creating high lows, high lows, high lows. So you could have easily drawn a trend line like this. As long as you understand that price action has to be connected from significant lows to significant higher lows if we're on an uptrend. If we're on a downtrend, significant highs to significant lower highs, and we're dragging it down to project the future. So now if we look here, we can clearly see we've broken out of this trend line, and now we're getting 1-2 rejection on a smaller time frame. Going to the 15 minute, you can clearly see that price action is rejecting an area of resistance, broken through the resistance. Even though we closed above, price action now is closed below. If I remove this, close below, and now we could see a potential sell-off back to these lows. So 120.800 could be a potential target for this trade if we see momentum still shift to the downside and continue this downtrend. We've got potential low lows, lower highs using a Fibonacci on a smaller time frame. This is just adding confluencies to the trend line. Clearly you can see price action pullback. We're back at the 618, and we could see, like I said, a potential sell-off. Go down to the, we've got the minus 27 coming into the first target here. And we have the minus 27 coming into first target, and second target's just below 120,400. So that's what my analysis for this pair would be. If I was using just trend lines and moving to the down to smaller time frame and using higher time frame analysis and building my bias and my confluencies. Okay, trend lines is all about adding confluencies and always using what's around you to kind of help yourself build your overall bias for the market. Okay, guys. So another thing that I wanted to talk to you guys about is this. Say for example now, I want to be looking at an area of, sorry, let me just remove this. Say for example now, I want to be looking at an area where price action could potentially pull back to here. I am building my confluencies. How do I do that? I am seeing that trend line is an area of dynamic resistance. I also see the weekly key level. So that's two confluencies in one area. What I'm going to do now is add another confluencies. How do I do that? I'm going to look at the significant point where price action had rejected, drag my Fibonacci tool all the way back to my area of support, and I can see the 50% is also lining up with the trend line on top of the weekly key level. That gives me free confluency that price action can now push back up into this region if we get an hourly closure above all of this structure. If we get an hourly closure bullish engulfing above here, we could look for potential upside move, but at the moment I do favor to the downside due to 1, 2, 3 push to the downside, retest, continuation. So GU, here we come to 120,400. Okay, clearly you can see momentum is dying out. Moving averages, we could see it sell off in a minute. So I hope you guys enjoy this trade. I hope you guys understand this analysis, and I hope you guys can actually take the information that I'm teaching you and put it into your own context and back test it and then use it. So catch you guys soon. On to the next lesson.